Good afternoon, Gurmeet. Thank you so much for joining us on the show. And Gurmeet, I was just going through your Twitter profile or the X profile, and I was just noticing the fact that you've written about the fact that every time you have an entrant that comes into a sector, we kind of write off that sector. And based on that, actually, we tend to also make investment decisions and said that's not what you should be doing, given the fact that now everyone's talking about Tesla and the likely entry into the Indian markets, which has been impending for the last two to 3 years. Every time Elon Musk has a meeting, we are expecting Tesla to open shop here. So based on that, what's your take coming in? Given the fact that you can see Mahindra hammered out of shape, Tata Motors was also bearing the brunt of that. How should one actually look at all of these developing scenarios and then take a look at investing in sectors like this?
I think the initial reaction is news-driven and a bit of sentimental. And considering that the sentiment has been weak, we are seeing a bit of price cuts. But if you go a little deeper and go as per data, somebody like a Tesla coming actually will boost the premiumization of the car story rather than it's a win-win actually if an innovator comes. You look at China, for example. BYD started off as a battery maker for mobile, then pivoted to battery maker for auto, and then now is the leading EV maker in the world. China also has CATL, which is one of the largest lithium ion phosphate battery maker of the world. So for EV to get adopted, the ecosystem needs to be built. It can't be done overnight. The charging infra, the battery cell, the entire ecosystem. So look at last year, for example, we sold 40 lakh cars, of which 1 lakh car were EV, which is 2.5% adoption. Now, to move from 2.5 to 10-15% adoption, we will take few years. It's not going to happen next year, right? You don't have that capacity. You can't suddenly. Plus, the price point at which Tesla sells in US. Now, assuming duties are also lowered in India, I think the lowest price, in my view, will come to like 30 to 40 lakhs, right? And if you see our top 10 selling cars in India, only two cars above 20 lakhs make the cut, which is your Scorpio and Creta. And there also the entry price is more like 16-18 lakhs, which is the starting point. So I think it's a little overdone in my view, but markets being markets, I may say it is overdone, and I may be further humbled with more price cuts. But this is the time to actually look at some names where I think the reaction is more negative just from the news point of it. I think the adoption will take time, and it's a win-win. I know whenever a foreign entrant comes, which is an innovator, it builds the EV ecosystem, and India is a very hybrid powertrain market. So you'll have a combination of EV, hybrids, CNG, and the IC engine. It's not that it will suddenly become an all, EV market.
Well, point taken, Gurmeet, because even CLSA has a similar view, I would tell you, because CLSA is saying that the Tesla-like re-entry is expected to actually boost the premiumization of the cars in India. They're just highlighting the fact that in India, the EV penetration in the whole passenger vehicle space is just close to 2%, and there's a huge headroom of growth that could be in place for Tesla, as well as some of the other EV players as well. They're highlighting that under the new EV policy, Tesla is actually expected to invest around over 40,000 crores, and in that as well, they believe that the de-rating, or rather the recent correction in the M&M that we have seen with expectations of a threat or a competition coming in is already done. The correction or the likely news impact is already in the price, and they're also saying that they do not believe Tesla's entry would have any significant impact from the likes of Maruti, Hyundai Motors, and even Tata Motors for same. And they have also done a very interesting analysis saying that Tesla cars in global scenario, if we see, then the price range over there, and even if the import duty could get slashed from like 110% to 15% now, Tesla actually could do two things, because to get the price lower to close to that 20 lakh mark, what the reports are highlighting, they either have to cut down some of the features, or they have to really get more of the manufacturing done in the Indian markets, plan more localizations through that, so that their cost is actually come down, or they could also go ahead and sell in loss. That is not likely. But overall, the point that they want to make is that despite the fact that seeing it as a threat for the whole car industry, this could actually be a good opportunity, and some of the stock reactions are maybe overdone. So that's CLSA's take on autos. But with this, let's also go across and listen in to the editor's take, wherein Nikunj Dalmia is sharing his take on the auto space.
since everybody in the market is talking about Tesla, the impact of Tesla on the Indian car market. How will that change dynamics for EVs? How will this change dynamics at least for the luxury end of the car market? All that and much more, we would be taking a deep dive on this edition of Deep Dive with me. Now first let me establish the size of the Indian car market. We'll talk about Tesla a little later, but first let's look at how large the luxury car market in India is. The luxury car market before COVID in India was just 20,000 cars a year. Now that has ballooned to about 50,000 cars. That's an estimate for 2024. The final numbers have not come out, but 20 has become 50. So the luxury car market in India is not a very large car market. Within that, if one really looks at Tesla and the different pricing of Tesla, currently Tesla has a 110% tariff. So Tesla's Model T3 in the current, after the current tariff, will be, the landing price would be 45 lakhs. Model 2 would have a landing price of 50 lakhs and Model Y will have a landing price of 70 lakhs, which naturally makes it extremely not competitive. But if you assume that there could be a duty rationalization, tariff wars will ensure that Tesla will get a red carpet welcome, tariffs would be reduced, then the prices of Tesla, which are right now at 50 lakhs for Model 2, Model 3 and Model Y, the popular models, could be ex-showroom 28 lakhs, 25 lakhs and 38 lakhs. That means that there would be a large part of the SUV market which is below 25 lakhs, which is the major market. Tesla is not going to have an impact whatsoever. Now if one really looks at the history of Indian car market, and this is very fascinating. We tend to think that a foreign player is going to come and have a disruptive impact. I just want to remind our viewers that there were nearly a dozen car companies which were operating in India about 15 years ago. All of them wanted a big foot in the door and they wanted a dominant market share of the Indian car market, especially the passenger car market, especially the entry-level cars. This is how things are stacked up right now. Maruti has 42% market share, Hyundai has 14, Tata Motors 14, Mahindra & Mahindra has about 11, others have 19. But the picture, let's say a couple of years ago, was strikingly different. Everybody wanted to have a major pie in the Indian car market. GM, Volkswagen, Piaggio, Daewoo. Some have gone bankrupt, some have gone away, but the Indian car market, with the exception of, let's say, Maruti and to some extent Toyota, is still dominated by brands like Mahindra & Mahindra and to some extent Tata Motors. So global players in India have not had a very good ride. In the exception there is Toyota and to some extent I would say Suzuki, which again has a great and a very long history with the India car market. The Europeans are there, but they're not very successful. The Americans, at least Ford, and for GM and Chevrolet, the experience has not been great. So is Tesla's entry a real fear? And let's look at Anand Mahindra's reaction. And he says that, look, we were questioned in 1991 when the economy was opening up, and we've survived. Working like maniacs to still be around and relevant even a century from now. That is the spirit of India.
Welcome back to Closing Trades right here on ET Now. We are discussing the markets with our experts, and today one such pack that is doing great is indeed the metal pack, because of late we are seeing stocks like Hindalco, Steel Authority of India, they are holding up quite well in today's trading session. But another stock, since the start of the day, Kunal, what I'm seeing is that Bata India is another stock that has been holding to gains of almost 3%. Any different or any technical setup that you can pinpoint for this counter?
I think nothing major. The only fact is that for Bata India, the stock is going out of futures, I think from next month onwards. This is the last month where you're seeing the stock in the futures. So maybe some bit of unwinding or maybe conversion of the short positions or closing of the short positions and converting of long positions from futures to maybe cash. And that could be because we are heading to the expiry week in the next week. So and that would be the only reason why I would probably expect that Bata India as a price chart, and all of a sudden the stock is going up, because I remember I think the last 4 or 5 days we had actually seen the stock going into a correction from 1370 or 80 levels. It had fallen down to 1270, 1280 thereabout. So this could just be a more of a very tepid rally into the stock, and looking at the scheme of things, I would probably expect that maybe close to 13, 20, 25, you might actually see the stock facing resistance rate again.
All right, so that's the take coming in on Bata India. We also have Nagraj Shetty on the show with us. But before I come to you, Nagraj, Gurmeet, let me come to you, and I'm going to talk about the FMCG index. On 1st of February, everyone thought that this would be the darling sort of sector for everyone to look at for the rest of the year, given the fact that you had this big push towards consumption. You saw 3% up move for FMCG index then. Post that, since the budget, the index has fallen about 8%. It has fallen for a 15th consecutive trading session. I want to understand now, should one look at the space given the fact that there could be some sort of good sort of news trickling in the H2 of 2025 for most of these sectors? Or do you think that despite the valuation correction, this one would be a no-go irrespective of what happens?
I think the budgeted reaction was more to do with the tax cut on FMCG. But if you see the commentary from most FMCG players, including HUL, Nestle, Britannia, I think what they have done is they've reduced damage. So volume growth is hardly there. It's in very early single digit, and valuations are still not cheap despite time and price correction. So till the time you see a durable rural recovery in play, good harvest season in April, and some more uptick there, only then is when you can be a little more comfortable there. I think the better way to play consumption boost is discretionary, and there you can you can play consumer durable, you can play travel and tourism, you can also play a bit of financial consumption. Some of the capital market plays, in my view, are part of that, and so maybe some of the new age businesses. I think that's a better way to play that rather than go with staples, because I really don't see double-digit volume growth coming very quickly there, and valuations are not dirt cheap. I mean, they've obviously corrected, but they're not very, very cheap.
Gurmeet, also give us a sense on the tourism theme, and here I would like to draw your attention to stocks like Indian Hotels and some of the other key players in the hotel industry, and even from the travel theme, maybe Indigo, because in the market fall, these stocks did participate a little lesser than the other large players, as well as this is the theme which many of the fund managers are liking. Any such stock or rather segment that stands out for you at this point in time?
Yeah, so as I said, hotel stocks have been reporting good numbers. Recently you saw ITC hotels getting hived off. I think that's corrected reasonably well, around 30,000 crore market cap. In terms of capacity, in terms of growth plans, I think it's almost 50-60% of what Indian Hotel does, and the valuation is almost one third of that. Not strictly comparable though. They still have to demonstrate how asset light they can be, the way Indian hotels have pivoted post-COVID. That's something. Interglobe, you already mentioned, that's been our holding for very long, been very constructive there, and now it's almost two-thirds of the market share now is with Interglobe. And I think the new business class, I think market can expand, and that can actually increase both the average fare as well as a bit of a premiumization, if you want to call, within there. And maybe IRCTC, but IRCTC, of course, other than ticketing, has e-catering as well as the water, which is Railway Neer, which are three dominant businesses. So I think you can play through a combination and make a basket. And as I said, some of the consumer durable names, I think you would see that extra 5,000, 10,000 saved will probably go towards maybe some of the AC makers, some of the electronic makers, with the considering that we probably will have a longer summer season ahead.
Right. Nagraj, good afternoon. Coming to you, just wanted to understand your take on the entire power space today. Yes, JSW Energy is having a good run given the fact that you have an initiation note coming in from Morgan Stanley. So on back of that, you have JSW Energy that is seeing a good move. Over the last few trading sessions, you saw some good momentum coming for NTPC as well, on the back of the fact that there are signs that the power demand was pretty good in the month of February. But if you have to look at the charts, do you think power stocks are making a comeback? And if yes, which one do you think would stand to benefit going ahead?
Good afternoon. Yes, indeed, power stocks have been bottom reversal mode, like you've taken a few stocks which are moving from the lower levels. If you look at the NTPC has bounced back from slightly lower levels of around 302 levels in mid of February and bounce back. Overall chart pattern, the NTPC is looking slightly attractive. The overall chart pattern is indicating that some more upside is left for the NTPC, and the next overhead resistance should be watched around 350, 355 once it sustains above 320 levels in the next day or two.
That's the take coming in on some of these power names. But Gurmeet, any such stock within the pharma space that you like at this point in time, given the correction that for the past 4 days, this news is playing heavy within the pharma basket, although the consensus view is that it should not impact the players' business largely and the tariff implication should not be that much versus the anticipation. But where should one place their bets within the pharma space? Because I was just reading a report highlighting that the exports have done very well in the month of January itself.
I also personally think that pharma relatively will be lesser impacted because the supply chains are very complex. It's very different than sourcing auto components or electronic components because of deep research capabilities, complex chemistry skills, and very complicated supply chains. So, but since tariffs is the buzzword, so then in the near term, the generics companies with high exposure to US could remain under a little bit of pressure, but branded generics because I think we've seen a correction. Something like, let's say, for example, Mankind Pharma, which is 99% domestic. The drag has been mostly because of the acquisition they have done, where they've taken some debt. So EBIT is growing 30%, but the PAT has got impacted because of the interest payment, because of the debt. I think they should be able to retire that over the next maybe 18 odd months through internal accruals and selling non-core assets. Then they are focusing a lot on the consumer health portfolio. Even the BVS portfolio will start seeing more synergies, reflecting in both top line and bottom line, and eventually would probably add to the EPS. Then you can have some select CDMO names where we believe there are a lot of molecules which can get commercialized. A lot of capex building has happened over the last 2-3 years, especially companies which have good pipeline in consumer health, in animal protein and health, and some path-breaking new therapies. So we are looking at something like Loris Labs there. DVs we have been holding for very long. So combination of maybe CDMO and branded generics, I think is something can be looked at, both from an earning momentum perspective and the size of the opportunity perspective.
Gurmeet, I want to come to you and I want to get your sense on the power related counters. We've got a chart check on the power names, but what's your take coming in the power sector as a whole? Do you think this merits a relook right now, or do you think that entire theme played out and you have to wait for some more time before entering? Gurmeet, this one was for you.
This is for me?
Yes, Gurmeet, it's for you. On the power sector, I just wanted to understand, do you think now is the time to enter the space or you should wait for some more time?
No, I think it's a if you see within power, if you see renewable, I think every year you will see a 30, 40 gigawatt getting added, which translates into a capex of, let's say, 1.5, 2 lakh crores. I think the bigger issue in the bottleneck, not in India and globally, is the grid, the transmission part of it. I think that is where I think you will have long-term visibility of order book and earnings, right? Provided execution is well. So some of the PSUs like Power Grid have corrected quite a bit. Tata Power is again more integrated both in terms of generation, distribution, as well as the EV play. Power Grid trades at about 15 times trailing, 12 times forward, good dividend yield as well. Then some of the transformer makers, I think, could present opportunity. Similarly, high voltage, which we call as HVDC. So the big challenge is transmission. I think that is where probably you will see better earnings, better visibility. So we are more bullish on the transmission side of it, and not as much on the purely just the generation side of it.
Transmission is the place to be if you want to look at the power space. But Gurmeet, with this we'll let you go and really appreciate you taking the time out and speaking with us this afternoon.